All right, guys, would you rather be on this beach? It's just a representation of retirement or financial freedom, however you want to call it. But the topic for today's video is buying rental real estate and specifically buying your first rental property. If you've known me over the last anytime. I've always been intrigued by this topic. In fact, this is why I got into the real estate business. I was in corporate America and I was like, okay, what's a way to honestly acquire and accumulate and build wealth. And everything I read, studied, uh, was the two main ways to do it is through business ownership and real estate. So I combine those two. I own my own business, selling real estate. So here I am. Fast forward that story, over a decade later, I've got several rental properties that my wife and I own ourselves, and cash flowing that thing. So I want to share with you what I've learned in my experience and how I can ultimately help you acquire real estate portfolio as well to help build your financial freedom, financial wealth, pay for your kids' college, all that kind of stuff through again owning real estate property. So the why of why own rentals, why own income producing properties is, well, first of all, income. I always say it's ideal. It's income, aka cash flow. You're gonna charge the rent minus the expenses. That's the easiest way to say it. And that cash flow, that difference is your profit, your cash flow. The next thing in ideal is deductions or depreciations. And that's expenses that will offset your taxable income. So did you buy a new, washer and dryer or a new AC, or did you paint the place? Those are business expenses. If you've never owned a business, you can take those, and once you own a rental, it becomes a business, and you can take those and deduct them, reducing your taxable income. I'm not a CPA, tax advisor, but bottom line, just wanted to plant the seed of that idea. And we can talk more about that in depth if this is something that you really want to pursue, because there's some really neat ways that you can do this, and even do cost segregation, just some really advanced strategies to greatly reduce your taxable income. So the next thing in ideal is equity. So you're building equity. Like let's take an example. I bought a home in early 2021, and I'm recording this video in mid 2022. A year and a half later, yeah, just only a year and a half, it's gone up nearly $200,000. Now, that's not always going to be the case. Okay. We've had a bananas market the last couple of years. We know that. But even if it appreciates at a historic norm of 5%, just 5%, okay, that property, that say $500,000 property, is gonna go up by 25,000 bucks. That's $25,000 that you didn't have to work for. Okay. It just is going up. And then also what's neat about that is, as the houses appreciate, your renter is also paying off your mortgage. So your mortgage is going down, your value is going up. Okay. And then, so that's that next one, appreciation, ideal. Income deductions, equity, appreciation, and then leverage. You're using the bank's money most times to buy that property. Now you can pay cash for properties. I don't do that. I like to leverage the money. Again, I'm a big fan of Dave Ramsey, but I'm also a big fan of Robert Kiyosaki. They're two very different talking heads on the topic of real estate. I lean more towards the leverage and using other people's money to help get into that. You can buy a home for 20% down, 25% down versus 100. Okay, it does change your cash flow and some of your risk, but it's a way to acquire, say, 4 properties instead of 1. But that's my personal philosophy. So that's the why of buying real estate, rental real estate. In the next video, I'm going to talk about the who to have on your team, the where, the what, and then on another video, we'll go into the how. So again, if you have any specific questions on this and the next videos don't cover it, please reach out. I'd love to walk this through with you more specifically. Take care.